Happy New Year! It's 2023, and before we dive in with the official first trading days of the year, I want to look at a year in the SPY. So I want to look back on 2022 in the S&P 500 SPY ETF. That's the Spider ETF, and see what insights it gives us into what may unfold in the first days or even weeks of the new year. So you can see I have the monthly chart of the SPY right now, every candlestick representing 1 month of price action. If you're new here, I'm Hema Reddy, and I use price action, momentum, and market timing or forecasting to help boost my trading and that of my tribe. So some of the techniques I use are based in the concept of a man named W.G. Gann. And one thing that Gann looked at was the relationship of price moves to one another. Okay, and a phenomenon that's super interesting for 2022 is this. So with this yellow line representing the month of January, okay, we can see where December shook out. You can see that when you compare it back to the pandemic low, we basically gave back half the gains off the pandemic low. Okay, that's what happened in the SPY. Now, it recovered and is sort of meandering since, but that's the sum of what happened. That's the simplest explanation. Also, on a momentum basis, the RSI power zones, my favorite momentum indicator, they returned to prior oversold conditions. That's important because what that means is that the market currently, the SPY currently, is trying to find a footing here with the RSI power zones back in the bull support power zone. It just hasn't done it with enough of a lift off yet to suggest that we're trekking up to new highs. Okay. So this is really interesting on the monthly chart. Now look at this on the weekly chart. So I'm going to change the time frame over to weekly. So each candlestick is going to represent 1 week of price action. And now let's look at the latest move that occurred off of that October low into the December high. That move got back more than 50% of the prior down legs gains. In fact, when we adjust our calculations, you can see it was 75% of the move. So this is me looking at ratios that Gann considered important based on eighths, based on taking any range of price and dividing into 8 equal pieces. So 75% would be 6/8. Now, since the high posted in mid-December, also look at the RSI power zones. They are dominated right now by the bear zones. That's been the case the entirety of 2022. Okay, so zone domination is something I teach in my RSI education. That's the 4 zones RSI coverage system or advanced RSI power zone system. But it helps you get the perspective on where things are relative to the time frame you're studying. That's super important, guys. All right, now let's take a look at what's happening on the daily chart. All right, so this is the daily chart, a little zoomed in. And I've kept all the annotations from the monthly and weekly chart. And now look, when we look at the most recent move from the October low to the December high, we're churning around that 50% level. In fact, the entire last week of trading of 2022 respected the prior week's range, formed an inside bar. All with the RSI power zones hanging out essentially in a neutral area, trying to hold the bull support zone, but not quite able to do it yet. So what this is pointing to is that there's actually a great opportunity, if you stay on top of it and if you stay ready for it, to capitalize on a potential breakout on the SPY. So here's what I'm seeing that is likely to shake out in the first week of the month of January 2023. And then the bigger picture I'll be diving into in my Outlook report that I'm going to do as I do every quarter. I revisit 20 of the top markets, and the SPY is one of them, and I'll go deep. But in that shorter term, in the first few days, here's what I'm seeing. There's an important short-term resistance level here at 387.41. If the SPY is able to get back above that, then I think there's a good chance for a journey back towards 419.96 over coming weeks. Now on the flip side, if the SPY drops below 374.77, and if it does so with force, like it actually continues to push lower, it posts a daily closing breaks below that level, then I would watch out for declines towards 356.96. And if that doesn't hold, you could see a fall as far as 325 before any substantial recovery. Now the key here, guys, is watching for the breakout of this consolidation and then navigating any trades you may make based on your risk reward, your account size, and more. I'm just giving you an overall view of where I see things potentially headed The good news is we don't have to guess which direction it's going to break out. This is such a narrow range that if you monitor it and you are able to capture when the break happens, you can trade in that potential new direction with low risk. This is especially important with the jobs data coming out on Friday, January 6th. And on top of that, I'm going to have a monthly group coaching live session where we're going to be ready to rock and roll into the new year. So keep an eye out on your email invites to my members of my courses for monthly group coaching live. It's coming up Wednesday, January 4th at 4:30. I'll catch you on the inside.